Hello everyone, welcome to ACCA P6 UK video lectures. In this video lecture we're going to look at the capital gains tax. Now the previous lecture, as I said to you in the previous lecture as well, that the previous lecture was exactly the same for F6 and P6 purposes. Reason was that the exactly same data is given to you in your P6 notes as well. If you remember, I was using F6 notes in the previous video lecture, but in this lecture notes, in this video lecture we are going to use the P6 lecture notes. Now if you could please open up your P6 lecture notes. I won't be sharing the screen with you because we only have to do a couple of small topics out of the P6 notes, so I won't be sharing the notes with you through the screen share option. So if you could come to the page number 47 of your P6 lecture notes please, where it says chapter 13 to 16 of capital gains tax. Now this basic calculation we have seen in our previous video. Just if you go beneath that, annual exempt amount of 11,300, we've seen that in the previous video as well, and then capital gains tax payable by individuals. On page number 48, exempt assets, we have seen it in the previous video, and we have done one question as well out of BPP exam kit of F6. I know that you do not have that exam kit, but the questions which we were doing out of that kit, that's why I share the questions through the screen share option as well, so that you can see them questions. So it doesn't matter because them were only small questions, so that was only practice. In P6, at P6 level, you won't be seeing the questions at that level. So they were just minor questions which were only for F6 purposes. Although that was good practice for you, but you will be expecting the questions, at the advanced level, so that it will be more complex than them. Right, then on page number 48, then transfer between spouses, we know that it will be at no pain, no gain. Part disposal of assets, we have seen that as well, and we have done one question. Entrepreneur's relief. Now, all of the conditions are exactly the same, which we have seen in our previous video. There is one last one, which is in here, disposal of goodwill to a closed company. Now, closed companies, just understand the closed company by a company which is owned by close family members. We will see closed company when we move to our corporation tax in a detail, but just understand it as closed company which is owned by close family members. All right. By related person. Now, what is related person? Who holds less than 5% shareholding, or if he holds more than 5% shareholding, then it will sell shareholding within 28 days to another company. All right. So either he will be owning less than 5% shareholding, or if he owns more than 5% shareholding, it will be selling to another company within 28 days. And he must also hold less than 5% in another company in which he is going to sell. Right? So that is called related person. And CGT rate is 10% on entrepreneur relief. We have seen that as well. On page number 49, if you come, investors relief, we have done that as well. Then residential property relief, just beneath that, on page number 49, residential property relief, we have done that as well. And I told you that it will be a residential property, and the rates will be 18% up to the basic rate band, and in the higher rate band it will be 28%. Tax planning for capital losses and annual exemption, I told you that we will, there is a criteria to set up the capital losses and the annual exempt amount. First we will do it for the assets qualifying for, not qualifying for entrepreneur relief, because it is a higher rate of tax on that. So we want to set up the loss against them one first. Likewise for annual exempt amount as well, and then we will set it off against the assets which qualify for entrepreneur relief. Then after that, associate disposal. Now this is a new topic here, and that is a P6 topic. We haven't seen that before. Now say for example, if I've started a partnership, if I make an example of this AccountancyTube, say for example, so we were two partners, we thought that we will make AccountancyTube together. Then we sat down and then we thought, then which assets do we need to start this business? One of the assets was, say for example, iPad. Then I told to my other partner that I will bring iPad from my home, and I will use that iPad for the delivery of lectures. He said, that's fine, it's all right. Then what we will do is, I know that it is my personal iPad which I'm using in my business, in my partnership, or in my company. But I will be charging a rent on that. Now, if I'm kind enough, I might not be charging any rent at all, but if I might be charging the rent as well. All right. Now, whenever I am selling that asset, if I have used that asset in the business for 1 year, in that case, it will be associate disposal, and entrepreneur relief might be available. Now, say for example, the market rent was £100. If I'm charging £100, entrepreneur relief will not be available. Now, the amount of discount which I am giving, less amount which I am charging than the market value, only on that portion will be will be eligible for entrepreneur relief. Now, say for example, market rent was £100. I am charging £70. Then the £30 discount which I am giving, so up to 30%, the entrepreneur relief will be available. Right? Now, in order to be eligible for entrepreneur relief, there is one other condition as well, that the main disposal must also qualify for entrepreneur relief. Now, what does the main disposal means? Now, if I'm selling this asset, the main disposal will be the main business which I am selling. Now, the main partnership business will also be sold. If that qualifies for entrepreneur relief, only then associate disposal will qualify for entrepreneur relief. All right, so that will be that will be one condition. Other condition is that when I'm selling this asset, when I'm selling this asset, that is my last step to withdraw the ownership in that company. So whenever I'm selling this asset, whenever I'm selling this iPad, my intention is to withdraw my shareholding from the company. So after that, I will have no relation with the company. So that is another condition as well. Now, if you look at the notes of your P6 notes, associate disposal. An associate disposal is a disposal of asset owned by a company, owned by an individual, which was used for at least 1 year for trade purposes by partnership of which the individual is a partner. Right? So I am a partner in this business, and I have brought my personal asset, which I have used in this partnership for 1 year, and we are using it for trade purposes. So in that case, it will be associate disposal. So what would happen if it is associate disposal? Note, if the individual charged full market rent on the asset from the partnership. No, it says form the partnership. It's not form. From the partnership, then there will be no entrepreneur relief. So if I charge full market rent, it will not be eligible for entrepreneur relief. If, however, less than market value is charged, then the entrepreneur relief will be available on just and reasonable basis. So for example, if the rent is charged 70% of the market value, then entrepreneur relief will be available 30% of that. Right? 30% of the gain of the asset. So that is our associate disposal, and there will be few conditions, as I said to you earlier. Main disposal must also be eligible for entrepreneur relief. Another condition is that sale of that asset will be my my one step to withdraw the shareholding in that company. So that will be a condition as well for associate disposal. Right, then on next page, if you come page number 50, CGT for individuals, we have seen that anyway. So yeah, we have already done that. Right, on page number 51, chattels, we have seen that as well. Now for P6 purposes, chattels are not as important as it is in the F6 exam. For P6 exam, it is not so important. So that's why I've just listed down few of them. After that, there is a leases, assignment of a lease. Now, say for example, if I had an asset on a lease and then I sublease it, so that lease was for less than 50 years, of course. Now the lease was for less than 50 years, so I've got an asset on the lease, then I've subleased it to another tenant. So when I got the lease, it was for, say for example, 50 years, then I subleased it to my customer. Now when I subleased it to my customer, the remaining amount of years left in the lease was 35 years. So I've already used the asset for 10 years. So that will be the scenario in the exam. So in that case, how to determine the cost? So that's how we would determine. When calculating the CGT, the cost of such an asset will be original cost. We'll take original cost at which I've got the lease multiplied by X over Y. Now X means percentage of number of years left in the lease. So percentage means that percentage will be given to us in the question. And then it says Y, percentage of number of years the lease had to run when first acquired. So that will be the percentage when I first got the lease. Right? After that is a negligible value claim. Sometimes when I buy an asset, immediately after buying, its value fell by enormous amount. So if I have bought an asset for, say for example, £30,000, and immediately after that its value fell to £5,000, so that is a huge amount. Now in that case, what we do is, because its value is negligible, what we do is we will make it a sales. In our books we will make it a sales of that, and then we will immediately reacquire after at the market value. So what would be happening basically, so market value at that time was so low, so we'll make that sales, so the cost will be high, so it eventually will create our capital loss. Alright, so I hope that you will appreciate the fact. Now this claim will usually give rise to an allowable capital loss. Right? And after that it says share loss relief against the general income. Now under the normal rules, I told you that capital loss will only be set off against the capital gains. Capital loss cannot be set off against the general income. However, if you sold shares of enterprise investment scheme, we have studied EIS scheme in our first chapter. So when I've sold the shares on EIS shares, and I have incurred a capital loss, now that loss can be set off against the general income. That is the only exception. So relief is available for capital loss on shares of EIS companies against general income of the tax year of loss and or the preceding year. A claim must be made by 31st of January, which is approximately 22 months after the tax year concerned. Right? Right, and so that's it for this lecture. These were the couple of things which we haven't seen in our previous video lecture, because that was for F6 anyway. So let's do a past exam paper now. Now if you could please open up your BPP exam kit and come to question number 10, which is ASH. Question name is ASH, and it is question number 10, page number 15 of our current BPP exam kit. It was examined in December 2012. Right then, now if we just read the requirement for now. So in the requirement it says we're only doing the part A for now. So in part A1 it says state the condition that must be satisfied for ASH assignment of the lease to be an associated disposal for the purposes of entrepreneur relief. So he's asking what are the what are the conditions for ASH assignment of the lease to be considered considered as associate disposal. So there will be a lease which will be, about the lease there will be information given to us about the lease. So we'll read that information. So then we will determine what are the conditions necessary for the lease to be associate disposal. Right then, if we read the question then, from the start it says Ash require a calculation of his capital gains tax liability for the tax year 17-18, together with the advice in connection with the entrepreneur's relief, registration for the purposes of value tax, and payment of income tax. Right? Now, then it says information about Ash. Ash is resident in the UK, had taxable income of £29,000 in tax year 2017-18. So £29,000, which means that she is a basic rate taxpayer. Then was owner and managing director of Level Limited until 1st of May 2017, when he resigned and sold the company. He is a partner in Vulcan Partnership. Now, Ash disposal of capital assets in the tax year 17-18. Now, Ash is disposing of the assets. Sale of shares in Level Limited resulted in a capital gain of £235,000. Now, the shares which she sold in Level Limited has resulted in a capital gain of £235,000, and it says which qualified for entrepreneur relief. So this £235,000 will pay tax at the rate of 10% because it qualifies for entrepreneur's relief. Right? Right then, after that it says Ash assigned a 37-year lease on property for £110,000 on 1st of May 2017. So 37-year lease was she assigned 37-year lease for £110,000. So that is her income, £110,000 on 1st of May 2017. Ash sold 2 acres of land. So that is another information about capital gains tax, and sold quoted shares and made a capital loss of £17,300 on 1st of November 2017. Then the information about the lease is given. So the lease, which was for 37 years. Now, lease was previously assigned to Ash for 31,800 when it had 46 years remaining. So previously there was 46 years when she first acquired the lease. Now in the lease there are 30. Now the lease is given for 37 years. Right? Then after that it says the property had always been used by Level Limited for trading purposes. Level Limited paid Ash rent equivalent to Level Limited paid Ash rent equivalent to 40% of the market rate in respect of the use of the property. Now this information is given to us because the lease lease was owned by Ash. Now Ash has given the lease for the use of Lava Limited, and then the Ash was receiving rent as well, which was equivalent to 40% of the market value. Now if it qualifies for associate disposal, then entrepreneur relief will be available, and entrepreneur relief will be available at the rate of 60% of the gain, because he's charging rent at the rate of 40%, so discount is 60%, so the gain will take 60% of the gain, so that will go into the assets qualifying for entrepreneur relief, and the 40% will go into the assets not qualifying for entrepreneur relief. Right? Then after that, sale of the 2 acres of land is given. So what our requirement was that our requirement was for lease. So what are the conditions for Ash's lease to be considered as associate disposal? So one condition would be that the main disposal, now the main disposal in this case is a Lava Limited, so the main disposal qualify for entrepreneur relief, which in this case it does. Sale of shares in Lava Limited qualify for entrepreneur relief. So the main disposal must qualify for entrepreneur relief. Then the asset must have been used 1 year for trading purposes, so that's fine. Whenever she has sold the lease, that would be her final settlement against the ownership in the company. So after that, she will not have no relation. She will have no relation with the Lava Limited company. All right. So that is another thing as well. And if she's giving a discount, if she's charging rent at the less than market value, then whatever the discount is at that amount, will take that percentage of the gain, and that will qualify for entrepreneur relief. All right. So these were the conditions which were necessary to write in this part. So all the conditions which I told you when we have studied the associated disposal. And we know that Ash was the partner in the Lava Limited, so we're fine with that because we already know that. Right? Now in the B requirement, if you see, the part A2, it says calculate Ash's capital gains tax liability. So we have to calculate Ash's capital gains tax liability for the tax year 17-18 on the assumption that the assignment of the lease does qualify as the associate disposal, and that entrepreneur relief will be claimed where possible. Now we have to calculate the capital gains tax liability. Now let's do this question on the board. Now, because there are 2 assets, one are qualified for entrepreneur relief and one will be which does not qualify for entrepreneur relief, so we'll keep them separate as I told you when we started the chapter. So the assets qualifying for entrepreneur relief, so these are the assets which qualify for entrepreneur relief, and then there will be assets which does not qualify for entrepreneur relief. So assets does not qualify for entrepreneur relief. I'm just writing ER. Right, so these are the assets qualifying for entrepreneur relief at the rate of 10%, and assets does not qualify for entrepreneur relief at the rate of either 10% or 20%, depending on the income, which band the income falls in. Right, then first of all, a capital gain on the disposal of shares in Lava Limited. So Lava Limited disposal. So now this was qualified for entrepreneur relief, so it will go into the first section. So it will be £235,000 in this part, because this will qualify for entrepreneur relief. It was told us in the question. Right, then after that, the lease information. So we will do working one of that. So we will do working on the lease. So in the working, if you see working 1. Right, then we'll have to take the gain. So first of all, we'll take sales Sales of the lease was £110,000. Then we'll take the cost, and in the cost we know that it will be how much was it? It was 31,800. So it was 31,800, and then we will have to multiply, because we have seen the method how to calculate it. So take the actual cost multiplied by the percentage. Now this percentage will be given to us in the question. Let me see. Now on the second page the percentages are given. The following lease percentages should be used where necessary. 37 years 93, and for 46 years it's 98. So multiplied by 93.497 over 98.490. Right? So that will be our percentage. So that's going to be 3188. And if we deduct this one out of this one, so that would be our £110,000 less 3188, and it's going to be 79,812. Now we know that Ash is charging 40% rent, 40% of the market value, so 60% of that will go into the this section, entrepreneur relief, and the other 40% will go into this section. So we'll have to divide into 40 and 60 times 40%. So 40% will go into this section, not qualifying for entrepreneur relief. So that is a 31,925 and less 79,812. That's going to be 47,887. So this will be this is the proportion, because we know that she is charging 40% market rent. She's charging the rent 40% of the market value. So what she's giving 60% discount. So whatever the discount is, we'll apply that percentage on the gain. All right. So that is the gain basically, and we'll take 68% and the 40%. Right. So that is our lease. Now the next asset which was given to us in the question, next disposal. Just give me 1 second. Let me open the question. Now the next disposal is of 2 acres of land. Right. Now we have seen how to calculate the benefit, how to calculate the capital gains tax on the land in our previous video lecture, which was of F6. But however, for F6 level, it is a little easier than P6. Now in this question, question as well, if you see, it's not very much complicated, but it is a little complicated than the one which we have seen in our F6 level. Now it says that excuse me, I sold 2 acres of land which is not residential property. Why is it telling us? Because at residential property the capital gains tax rate is 18% and 28%. So that's why it's telling us. Right, and it was sold for how much? It was sold for £30,000 on 1st of October 2017. So the sales is £30,000. So that is our sales. £30,000. Then we'll have to deduct the cost out of it. Now when we deduct the cost, now how much is the cost anyway? So cost in this case is Ash purchased 8 acres of land for $27,400 on 1st of June 2008. So on 1st of June 2008 she purchased it for $27,400. Alright. However, she has already sold few of them. So it says Ash sold 6 acres of land for £42,000 on 1st of August 2017. So she has already sold 6 acres of land. So we will deduct this. So we'll deduct 27,400 times value of the amount sold. So how much did she sell it for? £42,000. She sold it for divided by £42,000 plus the remaining amount, value of the remaining property, which was in this question, how much was it? £18,000 was remaining. Right? So £42,000 divided by £60,000. Right. So let's do it on the calculator. So that is going to be 21,780. Right, so that is a gain of 21,780, and this gain again would go into the assets not qualifying for entrepreneur relief. So 21,780 would go here. Right, so that's how we calculate it. Now, why did we do it with the land? Because although the sales was this one and the cost was this amount, but she has already sold few acres of land. So if she would not have sold it, then we'd take 27,400 multiplied by the amount she has sold it for. In this case, she sold it for how much? 27,400. So 27,400 divided by the amount of value of the remaining estate. So we would have done like that. But because she has already sold few things, so that's why we have to deduct that cost out of the total cost. So that's why we took this one. So the amount is 21,780. So this will go into the assets not qualifying for entrepreneur relief. All right. Right then. Now we have to deduct the loss out of that. In the question it says capital loss is given. So that is loss on what? Just maybe one second. Let me see the question. Loss on sale of quoted shares. Loss on sale of quoted shares. Now loss, we have two options. We can set it off against this amount and against this amount. Which one shall we deduct it against? I would say that we should deduct it against the ones not qualifying for entrepreneur relief, because we'll be paying tax at the higher rate here. We'll be paying tax at the reduced rate of 10% here. So it's better to set it off against this amount, which is 17,300 is the loss. So we'll set it off against this amount. All right. How much is the total amount anyway? So let's do this calculation as well. 235,000 pounds out of that. Then we have to deduct the the annual exempt amount. Annual exemption. Now annual exemption as well we can deduct from here and here, but I would say we should deduct from here because we might be paying tax at the higher rate. So 53,705 less 17,300, that is 36,405, and then we'll deduct the 11,300 annual exemption. That's 11,300, that is 25,105. All right, so that is our chargeable gain in this case, 25,105. And 282,887 in this case as well. Now we know that in this section there will be a chargeable gain at the rate of 10%. The chargeable gain at the rate of 10% in this case. So 10% of that is going to be 28,288. Right, so that is our chargeable gain in this case. However, we are not sure about that. We know that up to the basic rate band, we will be paying tax at the rate of 10%, and above basic rate band we will be paying at the rate of 20%. Now in the question, if you see how taxable income in the question is given, taxable income is how much? Taxable income in the question it says 29,000 pounds. Now 29,000, if her income is 29,000 pounds, now she might be paying some income at the rate of 10% and some income at the rate of 20%, because she might be exceeding the limit as well in the future. If we add 25,105 into 29,000 pounds, it will go into the higher rate band 1. All right. However, excuse me. However, she is still in the basic rate band, isn't it? But please remember, the amount qualifying for entrepreneur relief will always use the we'll always use the remaining basic rate band first. So the remaining basic rate band will always be used by the entrepreneur relief first. Then the remaining band will be used with the for the assets qualifying for entrepreneur relief, for the assets not qualifying for entrepreneur relief. All right. So the remaining band, remaining basic rate band or the higher rate band, will first be used against the assets qualifying for entrepreneur relief, and any remaining amount will be adjusted the remaining basic rate band or the higher rate band will be used against the assets not qualifying for entrepreneur relief. Now in this case, although she is a basic rate taxpayer, but because of her huge the chargeable gains of £282,000, she will be higher rate taxpayer or even additional rate taxpayer. So she will have already used the basic rate band. So in that case, she will be paying tax at the rate of 20% in the asset not qualifying for entrepreneur relief. So it will be 20% in this case. And if we take the 20% of that, so it's going to be 5,020 if I'm not wrong. 20% of that is going to be 5,020 or 5,021 if I think so. So just make sure you redo this. So it will be something like that. All right then. So that's it for this video.